A very good morning to everyone here. Thank you all for joining in this morning with uLaw practice. We have a small demo and a presentation on the topic Disbursements Demystified. So as you all know, Disbursements Demystified is something which is a very different and a difficult topic, but I think it's something that can be cracked easily if you're going to be following a few examples and points that we're going to be discussing in today's webinar. Now, I'm assuming all of you do have a uLaw account on the call with me here, so you could definitely go back and try out the examples that we're going to be doing it today. I'll take about 20 minutes to go over the presentation, and the remaining time we could look into the uLaw program. As the agenda suggests here, we're going to be seeing a few basics of disbursements. What are disbursements? How to manage them? How do we record them? Most importantly, like whether it's being spent from trust, general, and if it's your own pocket. What are the different types of general account? Because general account doesn't just mean only general bank account, but even a credit card or your own pocket is also termed as, non-trust accounts. So which is obviously something like general. And we're also going to see different types of disbursements, like a few examples on each. And last but not the least, what are the law society requirements and expectations when it comes to disbursements? So this is what I'm going to be covering today. And as you all know, uLaw is going to be helping you to record these disbursements in a very easy manner. So you don't have to worry about maintaining the records elsewhere, but just use uLaw to add them in every now and then when you incur disbursements. So first of all, what are these disbursements? In a very short and simple manner, I'm not even going into the lines of definition above, but if you see the second point below, it's nothing but expense incurred on behalf of your client. So we do incur expenses. Expenses are withdrawals from your trust or general. Mostly trust withdrawals are all disbursements. They're either payouts or disbursements. And general withdrawals can be office expenses or client expenses. Now, when it comes to client expenses, obviously you're not going to be owning those expenses, right? You're not going to be bearing, rather. It's going to be incurred by you on behalf of the client, but which is also going to be recovered from them eventually. Either if you have money of your client sitting in trust, you're going to invoice for this disbursement, or you're going to be raising an invoice for the disbursement that you have recorded and get the money into general account. There are very few items that we're going to be dealing with disbursements, even though it's a very vast topic. It can be exhaustive, but then, the core examples are pretty much enough for you to follow and understand how, each and every disbursement works. So basically, we're going to study the behavior of disbursements now. So when it comes to managing disbursements, when you incur a disbursement on behalf of your client, you are, first of all, required to record it somewhere. And when you have to record it, how do you record it? Basically, you work on few things such as following the money and how was it paid, whether it was paid from your trust account or general account or business credit card or personal credit card, how it was paid, and what was the reason for this expense. Now, that is the basic step. Once you record that, And of course, when you're going to record that, you need to record that under a specific client and a matter. Disbursement is not like a common expense, not like your office expense. It cannot be recorded elsewhere. It has to be recorded under the specific client. So you incur an expense for courier for client A, you cannot go and record it under client B and the matter for client B. So it means that you have to find the disbursement, how it was paid and what is the reason, and who it was paid for, basically the client's name and the matter that was related to, and you record it under them. Now, if it is paid from general account, if it's paid from trust, it's a very straightforward thing, guys. It's just one entry or one transaction that's going to say payout from trust. If the money is there in trust, sitting in trust, and if the disbursement is such type that it is allowed to be expended from trust, then you can use the money sitting in trust. Like, for example, court fee, filing fee, any actuals, okay? Any actual disbursement that has no profit margin, you have money sitting in trust, you can make the payment from disbursement from trust account. Some people like to just move the money from trust to general, spend it from general account using their credit card or general disbursement, right? So in that case, this point is applicable. You have to first decide what portion has to be invoiced. There can be about $300 that you're spending from the pocket, but you have to make sure how much is it that you're invoicing the client. So when you invoice the client, you send the invoice to the client and pre-bill and then invoice. Basically, you're going to be adding in the disbursement portion along, let's say along with the legal fee that you've already added in. Now, this will help you to recover the expense as you're getting the money into the general account. You're not using trust in this picture at all. So you're going to incur the expense on behalf of the client, record it under the client's matter with the reason and explanation, pre-bill, invoice, you decide what portion is going to be invoiced. Let's say if you're spending about $200, but you want to charge with a markup for $250 with your client, markup of $50, and which is going to be $250, then you're going to be using what portion to invoice and when to send the invoice to the client. Now, these are steps that include what can be paid from trust, what can be paid from general and owner's pocket. Now, you know that if there's a disbursement, whether it's trust or general, there are certain things to be followed. You need to follow the money, how it was paid, record it under the respective client with the reason and explanation. You cannot spend something for your office and call it as disbursement, right? So that is why we have something called office expense separately, and disbursements are client expenses, which are separate. If you see in uLaw, you would notice that both of these are given here. Now, besides this, there are a few things that you have to consider. Number one, why not pay straight from trust? Why does it have to be from general? Because Law Society has imposed certain regulations saying that if you're paying from general, it can be anything. You can add profit margin, you can do whatever you want. You would have not even spent a penny from your general account. But something like your photocopy, office expense, etc. But you're going to be doing it this way in terms of recording the expenses with information, date, right? But sometimes genuinely you would have spent from your general account, right? And you would have also incurred expense on behalf of your client from general. So you need to record it, such as the expense amount, the method of payment, matter and client, and how it was paid, whether it was general, credit card, owner's pocket, etc. So paying from general is such that you can use it for any expenses. But paying from trust carries only certain type of expenses. You cannot do it for basically like court fee, filing fee, processor fee, or any type of fee that are easier to be paid from trust rather from general, because any which ways you're not going to claim profit on it. It's an actual amount. So you might as well pay out of trust directly and save a step of, trust transfer over here. Now, when paid from trust, there's another good point is you don't have to recover the expense because you're using your client's money after all to pay the disbursement, right? It's not your money. And end of the day, it will definitely reduce your bookkeeping requirement, because if you're doing it from general, like I already mentioned, look at the number of points you have to record appropriately. So, but there's a catch here. Okay, even though paying out of trust is simpler when compared to paying out of general, the Law Society again imposes a restriction over here, saying there are some types of disbursements only that can be made from trust, right? So this restriction is where people sometimes get confused and say, okay, you know what, I'm not taking a chance, guys, to pay out of trust. I have so many of these paralegals and lawyers coming and talking to me on a daily basis, and they'll be like, hey, GT, you know what, I didn't know that maybe, I could pay this from trust. I said, absolutely, yes, you can pay this from trust. It's a court fee, it's a filing fee, it's an actual payment on behalf of your client. There is no markup here. So why are you hesitating, right? Like even an outsourced consultancy, even a third-party work can also be paid from trust. So there's a clear division of disbursements or types of disbursements that can be paid from trust and that can be paid from general, right? So over here, what does it say? Wherever it says both trust and general, at billable time, at recovery of expenses on actuals, like, court fee, filing fee again, and any outsourced consultancy or on actuals. So anything that is on actuals can actually be paid from trust. But don't ask me if there's an actual amount that you paid for photocopies and an actual amount you paid for courier charges. Can I pay that from trust? No. So you have to bifurcate that into general. That's why we have here, if you want to take a screenshot, welcome. So anyways, I'm going to be sharing this recording. So yeah, so in the types of disbursements, you are going to be considering that any billable, any recovery of expense, which are actuals, any recovery of expense with profit margins going to go to general. Any outsourced consultancies on actuals are going to go from both trust and general. So anything actuals, remember, can go from trust, provided they are court fee, filing fee, any, other fees, okay, like process server fee, etc., can be paid out of trust. It requires just a copy of the receipt, and everything else is good. Now, when you take only general, you see there's unit rate. Let's say unit rate is more commonly used for printouts, photocopies, and mileages for your travel time, etc. They all go only from general. And any recovery of expense with profit margin, remember, straight away out of your general account. Never from trust. Never. You cannot charge trust with profit, right? The maximum, even if you take, for example, your legal fee, you're not directly taking that out of trust. You have to, in uLaw, see there is a matter events where you're going to add a docket saying that I worked on a consultation, I worked on a correspondence, I worked on a hearing, invoice the client. Then you move money from trust to general. There's no one who can straight away pay out of trust saying, I'm paying myself for legal fee. No, that's wrong. So anything that is going out of trust, because your legal fee is obviously going to carry little profit margin, obviously, right? So that cannot be directly gone out of trust. That's a classic example, even though it's not falling in part of disbursement topic. Just want to bring something from outside and give you an example here. So anything with profit margin goes out of general, billed, transferred from trust to general if there is money sitting in trust. If not, you directly get it from your general account. Okay? Make sense? I think I skipped a slide before this, so let me walk you all through that. Now, we spoke about what are disbursements, how it can be recorded, and what are the different types of disbursements. Now, when can you recover these disbursements? So not just after you raise and not just after you incur a disbursement. How is the client going to know what is the disbursement? How is the client going to know what you did, right? So in that case, you are going to raise an invoice showing your client the details of the expense with the date of the expense, amount of the expense with appropriate taxes, whether there is a markup or marked down. Some of the lawyers, paralegals like to give them discounts. So there is also a concept of markdown here. Very rarely, trust me. Ensure that you are able to add them all and show them a real invoice. And when you raise an invoice, then you can go ahead and transfer the money from trust to general if there is money sitting in trust, or have your client pay you directly into the general account. Whatsoever it is, once the amount is coming to the general account, you can just simply pay yourself. Maybe you have expended it from your personal account. You can either pay yourself, or if there's anything left to pay the third party for consultancy, etc., you could do that. But make sure you have everything recorded under the respective ledgers and journals. Now, that rings a bell. I don't know how many of you know journals and ledgers, because we would have read it somewhere in our basic accounting class. I honestly didn't know basics of journals and ledgers until I finished my accounting program. So whatever you see on your theoretical part is not going to help too much unless and until you understand the concept behind it. So the concept behind ledgers and journals are very simple, guys. First of all, the auditors in law society, LSO or whatever province you're in, or the accountants, they're not going to come and open your uLaw or your spreadsheet and going to check each transaction by transaction, whatever you entered. That's definitely not possible, isn't it? So that is where the concept of ledgers, journals plays a role. Of course, whatever you're entering in to the respective accounts or clients, matters, wherever, it gets posted into the respective journals, which is trust receipt journal if there is money that you've brought in, or general disbursement journal if there's money that has gone out. So you all are aware of receipt and disbursement, at least by now, right? The receipt is money that comes in, disbursement is money that goes out, okay? Expenditure is also money that goes out. It's all synonymous. Payments, expenses, disbursements. It's just that disbursement belongs to clients' expenses, that's it. So we need to make sure, end of the day, all that you're posting is getting into these ledgers and journals that Law Society wants. So how do you do that? In uLaw, you're only required to do the first few steps that we discussed, the recording and ensuring the date, invoice, everything has been recorded, raised, completed. Your work stops there. We at the back end give you what you want in the form of reports that are called ledgers and journals, right? Now, there are 2 types of ledgers, 4 types of journals. I think we read this in the previous class 2 weeks ago. We did everything practice management. If any of you remember, I would be glad. So the ledgers are, more of a high level view, right? When compared to a journal, which is more of a drill down into the, purpose of a single type of activity, which is either receipts for the payment coming in, like I already mentioned, or disbursements for the payment going out. Okay, so it's going to record a specific type of ledger and journal. That's what we're going to see. Now, in this case, let's just talk about ledgers. What you're adding into your books, into the respective client's matter, is what is converted into ledger and uLaw, right? So you're going to add, let's take, for example, trust ledger on the left-hand side and general ledger on the right-hand side at the bottom. In the trust ledger, you see there's money that comes in. It's recorded as either retainer or mortgage advance or any other trust deposit, settlement payment in, settlement payment out, whatever, receipts, disbursements, respectively. There's a running balance. This is what the auditor would like to see, and this is what Law Society would like to see. We want the date on which you receive the money and what is the purpose with the running balance that I can cross-check with your reconciliation statements or your bank statements. There is not too much in the ledger because it is like a high-level view, as I already said. But when you come to the general ledger, it gives you an additional couple of additional columns where, in general ledger is a little different. You get to see the fee, what you've invoiced, the client, and also whether it includes taxes or not, and whether the client has paid the money back or not. So based on the type of the transaction, the ledger is maintained, and each ledger has a running balance with the date. If it's a general ledger, it will show whether the taxes are included or not. That's ledger. The next one is journals. There are, like I said, 2 types of ledger, 4 types of journals. Now, the 4 types of journals are trust receipt journal, trust disbursement journal, general receipt journal, general disbursement journal. Now, these are very important for an auditor. Journals are, like I said, not the high-level view. It's even more into a specific type of an activity. So journals are the record of every receipt and payment. So this way, all your disbursements are recorded, whether you have transferred the money from trust to general, whether you have paid out of trust account directly. It's seen in the trust disbursement journal and in the general receipt journals and general disbursement journal, as you see on the right-hand side bottom. It shows the method of payment is also captured here. Now, you might be wondering, what does the method of payment do? But the method of payment shows, it is an advantage to you, obviously. It's just going to show the auditor that, okay, I have some sort of confidence that this is a legitimate expense because there is a bank track number. Of course, they're going to look at your bank statements and verify with that bank track number. So that way, all of these makes more sense to you and your auditor. So there's no way you're going to sit and handwrite these journals. We are all past that. So that's why we play a role for you at the back end, and these journals and reports are provided to you. In the same order, we have something called fee book. Now, fee book additionally gives you both clients' legal fee and disbursements billed together or separately, but for the same client. If there's any fee billed or disbursement billed and the HST part, everything is seen here. So it records all fees and disbursements raised in an invoice, if so, and with the details of the invoice number, what is the total of the bill, whether there's HST portion or not, etc., is seen in the fee book. Almost to the end of the presentation, I'm going to jump into uLaw in a minute. So these are certain benefits for legal accounting software where, all of these transactions, events are recorded as and when they happen. That is why it is important to have a legal accounting software from day one of your practice, right? There's a difference between having it from day 100 when compared to day one. There's no question of, how early can I start accounting? I feel it should be even from day zero, because there's always an expense before an income. So there's always expenditures that you might incur for setting up your practice and etc. So have them start recording them into the program from day zero, so that every record, financial record and bank record, are as close as possible, and it makes your life simpler when it comes to the reconciliation tasks. So end of the day, all of this is done for keeping you compliant with Law Society, holding you accountable, and analytics. Some analytics if you're a person who likes to see the health of your firm every now and then. And end of the day, ease of use. I don't think any one of us are going to sit on a spreadsheet and do the calculations of these receipts and disbursements. And, that's a hassle by itself. So coming back to our uLaw program, I'm right now in a playground account. So my playground account is very simple. It's very similar to your EDU account. So please take a look at your EDU account and try to replicate. I'm sure Catherine would be giving you all some assignments. So just try and follow whatever I'm doing here as an example now, so you can go back and implement it in your EDU account as well. So over here, it starts off with contacts. The dashboard is something I always call as a landing page. As soon as you log in, this is probably where you're going to land in. And when you land in here, you're going to see many of items in the dashboard, but they're not going to be of help to you until you start adding in information under contacts or quick view or matters. So contacts is typically the primary place where you start adding in the information. So you could do contacts under the program, add in the clients. Let's say you want to add in a new client. Say the client's name is George. I'm going to skip the other part, but all of those source of contacts, address, other details are very important. So make sure you submit them from time to time. So now we're going to open a matter for Ellie George. And let's say this is a landlord-tenant board. Let's say this is tenant eviction or notice for tenant eviction or something. Okay. Choose the area of practice. These are not part of disbursement, guys, but just letting you know any which ways I'm creating a file. I might as well show you, and then the code file number, anything to describe about the matter, fee rate, assistant rate, default taxes, save it. Now that it's saved, a file has been created. The first thing you're going to do is obviously you're going to send, if you have a trust account, if you have the habit of collecting a retainer, you're going to get a retainer into the account. So you're going to, once you get some money into the trust, you can start the work. So let's say there's a email transfer sent to you, and you are recording that in uLaw right away now. So that way you can give your client a nice receipt and apply it. Okay. Not downloading the receipt, but just showing you there's a way you can generate a receipt. Now to begin work with, you want to go to matter events, add in a flat rate legal fee maybe, or a billable time. It's up to you, up to your practice. I'm doing a $250 flat rate, save it. Now I go to disbursements because there's a bunch of disbursements. So this is where you're going to take a call whether it's going to go under trust or general first. Now, what are the set of disbursements? Let's say I've made a filing fee or a court fee. So yeah, you could make that from trust. Remember we spoke about how fees and actual payments can go out of trust. So you said paid from trust and you spent this $150. The check number, you gave a check. The description was filing fee, paid to courthouse, print a check. Of course, you can print a check from the program. Again, I'm not going to download it, but just letting you know there's a process where you can print a check from the program. Now, you saw trust is straightforward. Right now, on the right-hand side top, if you see, there's projected balance, flat rate, disbursements, and trust receipt. Now, trust receipt is automatically become 350. It's gotten down to, disbursement is still 0 because I paid out of trust directly. It is a payout of trust, even though it's called disbursements, but it's recorded in uLaw as trust payout. So it automatically got reduced from 500 to 350. Now, my trust has only $350, out of which 250 plus tax is 282.50 is already gone towards my legal fee. So I'm left out with 67.50 in my trust. Okay, if I invoice more, obviously, than 67.5, they're going to pay me into my general account. As simple as that. But I need to show what did I expend on, or what am I charging them for that specific invoice to go beyond 500. So here I'm going to go to withdraw from general. There are several types of withdrawal from general. Which one do we choose? Now, the first three are very frequently used, of which the first one and the third one are just ditto. It's just that miscellaneous goes under miscellaneous when you don't know what type of expense it is. Just charge it as a miscellaneous expense. If you are more specific, want to be more specific, you go with the first one. The first one is where you can play around with the markdown strategy. So you're going to say, let's say the item name is photocopies. I'm charging my client $20 plus taxes, but I'm incurring $0 because I used my personal printer or my office printer, whatever. You used your own printer. That's it. So your reporting expense is 0. You come down. You're going to just say, there's no bank, cash, nothing involved here. The bottom portion is completely empty. So this is an absolute profit to you. All the 2260, of course, 2.60 you have to pay towards HST, but the $20 is the profit to you. Now, that's the first thing you would use. So that's the benefit of having a top portion and a bottom portion. You can also sometimes charge a lesser amount and report it as an expense. So it works that way. Now, pay disbursements from actuals. This is mileage units, whatever. You could use this for actuals purposes, mileages, and units. Actuals are billables. Let's say you had some third-party consultancy. Third-party consultancy is going to be on a separate tab. Let's say this one is something that you hired a translator any court reporters, transcripts, processes, whatever it is. You're going to be charging an actual amount to the client. So you incur about, let's say, $50 plus taxes, or $95 plus taxes. You're going to enter the top portion. The bottom portion is not even there. Of course, the bank is there, but unlike the previous one, there is no bottom report expense portion because this is an actual. Remember, in actuals, you're going to charge the same amount as you incurred to your client. Okay? So here, you're going to click on Save. And now you see that the actuals are also recorded. Let's say we're doing another disbursement here. So we saw how the general cash other accounts work, actuals work. Let's do a mileage here. When you do mileage, you can say that travel, client meeting or something. Client visit is there. Let's use that. Supposed to be around 50 kilometers. 0.40. You want to charge taxes, of which you really spent maybe, sure of $20. You spent about $5. Okay. And then you're going to record saying I used my debit card for this and enter if you know the debit card number. So this is the thing. So you can use this for mileages. You can charge a different amount for mileage and different amount for expense. Unlike the actuals, you saw again I was able to report expense for mileage. Same way goes for units. If I'm doing photocopies, I'm charging, I want to show my client that, I printed 5 pages at, maybe 0.50 per unit. And however, you spent only maybe, $5 again. And how did you spend for it? Maybe my debit card. I went to the library and printed it for cheaper price, even though I don't have a printer. So the previous one and this photocopy, you can know what is the difference. The previous one, I randomly want to charge them. So I entered the top portion for a bulk amount and left the bottom portion empty. Whereas when you take this one, I wanted to charge them specific amount for per unit. I want to show them per unit cost, etc. So I did this way at unit rate. And if I had any expense amount, I could do that. Otherwise, I would leave this also as a 0, right? So now that's about actual mileages in units. Miscellaneous expense, like I said, is very similar. It's just that if it's not specific and miscellaneous, you put it under the miscellaneous expense, expenses on whatever. You can create a number of client accounts and put it under that. Right, while that is being done, you're going to be able to enter third-party consultancy here. Let's say you hired someone for maybe reviewing the case law, and you did about pay them $200. They don't charge you HST. You're not charging your client the HST, but you paid them only $100, tax exempt. Or you can charge taxes if they charge taxes, but you're marking up the price here. And it goes under the consultancy tab, okay? So it is a consultancy expense. It's not going under fees or expense paid on behalf of client. It's going under your consultancy expense on the chart of accounts if you see in accounting. So these are working at the back end. So that's why it's important to enter specific type of or nature of expense under the specific tabs that we have provided so that it goes into the respective journals and ledgers, and it's going to be generated as reports to you. And how did you pay for it? Maybe you did an email transfer. So you enter the email transfer, enter the reference number, and save it. Now the client owes you has increased. Prepayment to disbursement is something that is not more often used, but it is used when you have a deposit account and you're expending from that deposit account. So if you see, notice here, there's no bank here. It's used more by real estate lawyers because they have to handle deposit accounts such as TerraView and LDD or Unity, whatever. So in generic, prepayment to disbursement doesn't handle bank. When you're depositing the money into the deposit account, at that time bank is involved. However, when you're expending from it, there is no bank here at the bottom. There's only the deposit account, the prepaid account, etc. that you have to select if the money is going out of it. So now this is what I have entered as legal fee and disbursements, bunch of disbursements at retainer. I want to invoice my client. They owe me some money. You see 316.70 on the top. And there's also a $500 sitting in my trust. I might as well use them. So let me invoice my client, record all of these expenses to them, and they will have an idea as to what is the amount they have to pay us, right, at this point in time. So when they do that, you'll be able to move the money from trust to general, and you will also be able to know what is the amount that the client owes you. Okay, so this is the invoice. Very clearly gives you legal fee. The disbursements, with or without taxes, is recorded. You see how the mileage and photocopies are seen here or shown here. And you have the retainer, billable, due, etc. Go back to uLaw. You can click on question mark and move the money, or you can go to trust. When you go to trust, you can click on withdraw from trust, because you're first going to withdraw $500 from your trust. So trust transfer. Of course, you're going to do this in the bank. Then you're going to do it in the uLaw program, so that you have a reference number to record that in the uLaw program. And you enter the reference number over here at the bottom and click on transfer. Then you can download a Form 9A. I think we saw this in our Everything Practice Management webinar. How important is Form 9A when you complete a trust transfer electronically? That's the catch. So this is called Electronic Trust Transfer Acquisition Form. So no one goes to bank today and does it. So or deposit a check or whatever. Everyone just does it through electronic mode. So Law Society wants to see what is it that you have transferred money for from trust to general. Please show it to me. So that's the reason. The next one I'm doing here is getting the money into general account with a balance amount of 316.70. So I'm using the general tab, going into deposit in general, because that's what happened in your bank, right? So remember the basics where you follow money. So when you follow the money, you know that 316.70 came into your general account. So you go into uLaw, go into general, go into deposit or accept payment, and you can enter the actual details, right? And you can also give your client a receipt and apply it. Of course, just want to download one receipt and show you guys. It's also one of the important documents. That's how a receipt is going to look. So your payment that's been collected and there's no other balance due. Go back in here, everything is done. Question mark, there's nothing pending here. All the deposit invoice, everything is paid. So the transactions you recorded in your matter, how is it seen in accounts? When you go to accounts, when you go to your general account, just take today's date, Feb 24th. So 5.65 for the client visit, reviewing case law, 5.65 for photocopies, the money that came in from the client, the money that came in from the trust account, everything is recorded here for you in the general. All the disbursements, all the payments. If I do a compliance check, let's say the client's trust, just for today's date, right? I'll just download it and show you. You're going to see what happened in the client's trust. There was $500 paid by the client first. Yes. I removed $150 to pay a trust disbursement to the filing. Then rest of all was trust transfer, for disbursements, for legal fee, everything put together. I mean, these are what the trust ledger would show. That is the money that came in and the money that went out. Now, with regards to the money that general account got, I can just simply go into client's general and see. It will show you the client payment, the trust transfer, the invoice that you have raised for. So this is the invoice you have raised for, one on the top. and the one below on the payments on client's account will show very clearly. So you see how the bracket also shows with taxes and everything there. Shows you the amount that is received from the client, from trust transfer, everything on the right hand side. So end of the day, your total invoice is matched to the total amount received. Okay. The next one now, let's say I want to show you a general disbursement journal. Now we saw ledger. There's also journal. Remember, the journal shows you single type of activity. Now the general disbursement journal will show you all the disbursements that was made from the general account. You won't see the $150 of trust disbursement here because that was disbursement from trust, remember? So this is disbursement from general. So it'll show you all the disbursements. It was $209.05 worth of disbursement that was made from general. Okay. And what do you see here? The method of payment. I didn't anywhere record paid to. I easily skipped it. So, don't make that mistake. It'll be left blank. But now when I download a client's trust payment, okay, you would actually see that $150 and the paid to will have courthouse there because I purposefully entered courthouse. Okay. See the first line item? And see how it's getting recording the method, paid to, file number. File number is all automatic, but at least these two, method and paid to, is something you have to remember to put in yourself. Only you know it, right? When you take fee book, let's take today's date fee book and see how both legal fee and disbursement is nicely shown with HST or without HST for you. So this is your total invoice, 666.70, and how neatly it's done here by us. You have the date, client, description, whether it's a legal fee or disbursement, whether it is out of trust, general, everything is recorded here. Fee book doesn't want to bifurcate that way, but anything that is come into the general account will go into fee book. Okay. So remember, you don't see the $150 trust payout here because it is directly paid out of trust. You didn't invoice your client to bring that into general account. So it was never included in your invoice. As in it was included in your invoice to show the client as a trust payout. That is why it didn't come in the second page. If you closely look at the invoice, in the invoice, you see that the first page has the legal fee, second page has the disbursements. These are the disbursements that you see in this fee book here also. But this $150 is not shown as the disbursement, but as a trust payout. It's a disbursement, other payout from trust. So it's directly withdrawn from trust. It is not invoiced under the other disbursements. So the fee book will not carry that part. So these are some things that we wanted to walk you guys today. So I hope we've made a slight difference. Now there can be more questions. There can be more learning going into this topic alone. Okay. I recommend all of you to look into our uLaw answers under help. There are tons of tutorials, uLaw answers, guide, audit guide. There's so much of it over here. So please review those. Most importantly, subscribe to uLaw Practice channel. This has plenty of videos that would help you for disbursements or any other topic in general. Almost 500 videos in there. And there are a lot of these FAQs that have been made as videos for better understanding. So any questions, I'd like to open the floor for next 5 minutes for any questions. Catherine, I would request you to ask your students if they have any questions. So please, all of you, remember to access help for any uLaw answers or go to our YouTube channel. Subscribe to it, irrespective of it. It's going to be helpful. It's more like a video library for you all. So it'll be really helpful. Follow us on Twitter and Instagram. We also keep posting a lot of videos in there. So if you all have any questions, Catherine, I see that there are no questions from your side. So either I was too clear or I was too fast. I understand this is a very vast topic, so I did my best over here for all of you. But There can be questions when they're practicing. So, Catherine, I request you to root out anything that, I'm sure you will be able to handle most of them, but if there's anything that you think I can give my, bit of advice or teaching there, I would be happy to do so. So please always email and we'll be happy to assist you. But thank you all once again for joining in this morning. I wish you all the very best and keep continuing to use uLaw. And I'm sure it'll be making a big difference in your practice and in your daily life. This recording will be available as early as Monday. Kindly allow us a couple of days to consolidate all the videos and send it to you, Catherine. And if any questions, please route out to our support and myself. Thank you all. Have a nice day. Take care.